Are you planning to invest your money? Where would you invest your money? How would you know where to invest? When should you start investing is one of the numerous queries that new investors have. What should you put money into? Whom should you follow or ignore when it comes to financial advice? Why must investing be so difficult if it is so crucial to your financial future? The good news is that it doesn't have to be. These simple and direct suggestions for first-time investors show you can simplify the complicated process of learning how to invest. So, stay tuned with us and watch complete video. 1. Use goals to determine your time horizon. What you're investing for will go a long way in determining your time horizon, says Lamar Watson, creator of Dream Financial Planning and a licensed financial advisor. How long you have to wait before using the money you're investing is known as your time horizon. According to Watson, this might be the most significant element in how much risk you can tolerate. The more risk you can afford to take, the longer your time horizon must be. According to Watson, you can tilt more heavily towards stocks if your time horizon is 10 years or longer. Between 5 and 10 years, you should have a good mix of stocks and bonds. Less than 5 years, you shouldn't have any stock exposure, and within 2 years, you should only have cash and cash alternatives like certificates of deposit. 2. Get to know your risk tolerance. Only take on as much risk in your investments as your investment objective and stomach will allow. It doesn't follow that you should increase your level of financial risk just because you can. Your allocation to stocks and bonds will define your level of risk. More risk is associated with more stocks. Mike Hennessy, founder and chief executive officer of Harbor Crest Wealth Advisors in Fort Lauderdale, Florida, explains that the allocation you select is analogous to how quickly you choose to drive your car. No one wants to go from 65 miles per hour to 35 miles per hour in a matter of seconds, so your allocation should remain relatively consistent, he says, but it should change over time as you get closer to your investing objectives. 3. Start with broad-based investments. What to invest in is the next crucial decision that new investors must make after whether to invest. Choosing investments might be difficult because there are so many options available, according to Williams. Fortunately, there is an easy way to start with broad-based mutual funds and exchange-traded funds, which pool the money of many individuals to buy a variety of securities. Choose the proportions of cash, bonds, and stocks you want first, and then fill in the gaps with money that corresponds to your chosen allocation. 4. Keep your costs low. Although you have no control over how well your investments do, you do have power over the price you pay for them. Michael Pappies, founder and CEO of Amity Financial Planning, advises novice investors to pay close attention to an investment's costs. This typically entails choosing index funds over actively managed funds, which typically have expense ratios that range from 0.67% to significantly higher, according to Morningstar's most recent charge research. According to Pappies, over time, these rising costs might eat away at the return on your investment. 5. Don't be afraid to ask for help. It is not stated anywhere that investing must be a lonely activity. According to Stacy J. Miller, partner, vice president, and wealth advisor with Bright Investments, my best investing advice for beginners is to seek for guidance if you're not an expert. Any concern you may be experiencing can be managed with the assistance of a financial counselor who is not only for the wealthy. However, Miller advises that you should thoroughly screen any advisor as you would someone who will take care of your children. Inquire about the certifications held by potential advisors and if they are fiduciaries. Miller advises finding chartered financial analysts and certified financial planners, then finding out how much working with them will cost you. I hope you liked what you watched. Do not forget to subscribe to the channel for more upcoming videos.